I try to look at deals. I want for sure things, right? So I try to find out how bad a deal can do and we still make it and still cash flow and everything. And when I'm looking at this thing, I'm like, there's no way that this, like, in my opinion, like based on the cash flow, it's worth, $6.5 million. We picked it up for 4.9.
Welcome to the Apartment Investing Journey, where we explore every facet of multifamily investing and development with top investors, brokers, and service providers who share their strategies, successes, and secrets to help you on your apartment investing journey.
Hey guys, welcome to the Apartment Investing Journey. My name is David Robinson. I'm here with our guest today, Justin Spaulding. Thanks for spending some time with me today, Justin. I appreciate it.
You're welcome. No problem. Anytime.
Yeah, looking forward to diving into our conversation. We had a chance to chat a few weeks ago, a little bit about your story, and I'm excited to have an opportunity to dive a little bit deeper into that and also share your story with the rest of our listeners. So a little bit about Justin. He is the president and co-founder of the Spaulding Group, as well as SG Realty, both the property management and real estate holdings companies. They own and manage over $25 million of real estate, including 300 apartments and 3 commercial office spaces. Justin made his first real estate investment at age 19. He then became an independent distributor for a leading direct sales company where he grew one of the largest producing sales teams within the company, and then used his direct sales income as seed money for his real estate investments. He has successfully raised more than $6 million of third-party investment funds for real estate deals. And most recently, he is a minority shareholder of Mavana, Mixed Animal Veterinary Associates North America, yep, and currently owns 30-plus veterinary practices throughout the continental U.S. And
so
then
I'm a small minority shareholder in that company. So.
Oh, gotcha. Okay, thanks for the clarification. And then also, Justin was an NCAA All-American football player at the University of Dubuque, Iowa. And in September 2019, will be inducted into the University Hall of Fame. Man, you got a great bio. And I've had a couple collegiate athletes on the show with us. And it's interesting to me how those collegiate sports sort of translate into the business world. Any thoughts on that before we dive into your story?
For sure. Well, I'll throw this out there too. If it was not for college football, I would have probably not gone to college, and I would have started my own business right out of high school. I learned more from playing sports through, I think I started playing soccer in kindergarten, started playing full pad tackle football first grade, playing all the way through college. I learned more, being a captain and being a teammate and lifting other people up that way and competing than I did in the classroom for sure. All that stuff correlates more to what I'm doing today, just with, the adversity you have to overcome and, all that stuff. Sports, definitely. I paid to play too. I was a Division III football guy, so I paid to play. Yeah.
Those are the guys that are committed right there.
Yeah, yep. So, but if it weren't for football, I don't know. Maybe I would have finished school, but I don't know. I started reading so much. So I tell people all the time, because if you kind of follow me on Instagram, kind of know what I'm doing. I always talk about, learning. And for me, like my learning and then being able to implement what you learn, right? Well, for me, the learning started in 2009 of when I was a sophomore. And so I would actually, by the time I was like a junior and senior in college, I was going to get books, and I would literally, there were certain classes that I would skip. I would read my own books. I'd go work out, go to football practice, and there were classes that I skipped because of that. So
yeah, I bet.
Yeah.
Well, maybe we can sort of start there, and maybe that'll transition us into the rest of your story. I mean, walk us through sort of your experience in college, playing football, what that experience was like, and then how did that mold you, and how did you transition into the direct sales and then into real estate? I know that's a lot to cover, but
so I'll just it's just all story based, right? I mean, it's my background, right? So my freshman year of college, went to UW Whitewater, which was like 15 minutes down the road from where I grew up. I had some Division I like walk on, opportunity to play that way, but it wasn't right for me. So went to UW Whitewater. We were a national runner up that year. So I played some special teams. I contributed that way. I got an opportunity to transfer to Dubuque. I knew the guy that just became the head coach. I transferred there. They hadn't won a conference championship in like 30 years. The football program was brutal. So I wanted that challenge to be a part of growing something. So was a 3-time captain there. Still throughout this whole time, I didn't know what I wanted to do. We took a trip to Chicago, and that's where kind of real estate came into play. I actually think before the trip to Chicago, I think I read Rich Dad Poor Dad. So that kind of got my mind thinking with like business and cash flow and stuff like that. Took the trip to Chicago. Trump Tower was going up. Didn't know who Trump was then. But I just saw that tower going up on the Chicago River there, downtown Chicago. And I'm like, man, it'd be so cool to be a part of something like that. And right away, I went down to the bookstore down there on Michigan Avenue and got a Donald Trump book and read it by the time we got back. And I was hooked, right? So then I just started getting anything I got my hands on. And like I said, I started skipping classes to read. And then I would go to workout. I would go to football. And through that whole time, my sophomore year, we went 5-5. My junior year, we thought we were going to be a lot better that year on the football field. We went 4-6. We had a lot of injuries. And then in both those years, I was captains. My senior year, I was a captain. My senior year, we had a lot of guys returning because we all had all basically started as sophomores, juniors. And then so seniors were very experienced, but we still were not projected to win conference. And then all of a sudden, we just crushed everybody in our conference. And so it was cool to be able to bring a conference championship to Dubuque and just, through that whole thing. Because previous to Dubuque, I'd always won. So there was maybe, playing 10 games a year from first grade through my senior year of high school, and then playing 16 games or whatever it was my freshman year of college. I'd lost a total of 5 games in my career. So to go 5-5 my sophomore year, then 4-6 my junior year, you have 11 losses right there. That was so mentally challenging. But then to be able to see the reward, that next year, which was kind of like real estate, right? I mean, it took me 2 or 3 years to really get started, but then you see the reward of doing it, right? So now I graduate, I get a chance to get involved in direct sales, and that's 2012. It took me 1.5 years to build it to the top 0.5% of the company, but by then I'd saved money. I put down some money. My mom and dad knew that whatever I had my heart on, I was going to be dedicated and committed to. That's just how I'd always been. So they put up half the down payment of the first deal. We bought it cash flowing, and that was kind of the entryway. Direct sales as well taught me a lot too, because it's in the sales world, you hear a lot of no's, just like you do in real estate, just like you do going out to look at property, or, you throw an offer in, no, whatever it might be. So through football and through that college experience, I guess through football growing up, I learned how to be competitive. I learned how to win. I learned how to lead people. Then through college and football with the 2 losing years, I learned how to do those same things, but also help build people up when you're getting your ass whooped quite a bit, turning around our senior to winning. And then direct sales, it just helped me overcome that no, right? I'd already been through the adversity. I already knew how to lead people, but I'd never really heard no before necessarily, right? So direct sales helped me do that. And you look at putting that whole thing together, plus the way that I was parented, the way that my parents, I never knew any limits, right? It was always whatever you want to do, they just instilled in me that I could go do it. So I never really understood limits. So when you kind of mix all that together, it's a pretty fortunate experience that I got to go through to set me up for where I'm at.
Yeah, it sounds like a lot of great things in your upbringing that has got you to the place that you're at today. Let's talk a little bit about that first deal that you did. I was actually curious. So did you buy your first property in 2012, first investment property?
I think it was the fall of 2013, I think was the first one.
And was the first property that you ever bought, was it an investment property, or did you buy a single family home first that you lived in?
Nope. And so it was a 4-unit.
Gotcha.
It was, the rents were about 50% under where they should be. They were $400 a month. I knew in the area they could go for $600, $650. So we bought it cash flowing and then improved it, and everything that we added dropped to the bottom line right away. And I'm like, damn. So,
man, that's great. So you had read Rich Dad Poor Dad.
Yep.
And you had graduated from college. You had started direct sales, and then is that when you bought this first 4-unit?
So I'd already been in direct sales for I started direct sales basically 2 or 3 months before I officially graduated. So I started that in March 2012, and then August 2013 was when I did the first purchase. Now I had a couple properties under contract before that we just lost out on, and whatever, it just didn't happen. So yeah.
Okay, that's great. So take us from there. You get your taste of rental real estate in the 4-unit. You end up buying the one next door. How did things play out from there? You're still doing direct sales.
2013 we bought the first one. Then I sent out letters right away. The guy next door ended up with the 4-unit as well. Got back to me 8 months after I sent that letter. We ended up buying that. We put $5,000 cash in. He seller financed the rest. We got that thing cranking. So those things are crushing it. And what I did then at that point is I just kept learning, kept reading, kept growing my direct sales to save. And the next property, when you're starting, once again, it's kind of a slow start sometimes, depending who you are. For me, it kind of was. We didn't have another purchase till mid 2016 as far as a larger deal, and that was the $1.2 million storage unit deal. So it was kind of in between there was a lot more learning. There was I looked at a ton of properties once again, but just couldn't really make them work and pull them off. Somewhere in there as well, we refinanced those. By then we had 8 units, right? We refinanced, pulled $100,000 out. We put 50 of that back into the property just to fix it up a little bit more and take it above and beyond our competition. And that's all tax-free, right? When you refinance, took the other 50 and just saved it for the next investment. So then 2016 came around and, I didn't think I wanted anything to do with storage units. My buddy, Josh Eastman, who's in a lot of my Instagram posts and stuff like that, my best friend, who's actually a roommate in college, he brought the storage units to me. I'm like, dude, no way. And then finally I had a day off, and Dave, if you're anything like me, like you get bored or whatever, right? We got a lot of energy. And so I was bored. I'm like, hey, Josh, let's go look at this storage unit facility. And it'd been listed for 12 or 13 months. And we met the owner down there. I just looked around, I saw a ton of opportunity, and we were able to make that deal work. So that's what happened in between there.
What was it about the storage unit that you were resistant to?
I just didn't know what I didn't know, right? So finally I just opened up my mind. Hey, let's just go look. Let's go look at what it could be. And, turns out there's 110 storage units. There's 5 apartments. There was a billboard. There was a 4,000 square foot vacant shop space. There's 4 or 5 other shop spaces that were rented. And there were a lot of vacant storage units. There was some vacant, that shop was vacant. So I'm just looking at all the value we could add. I'm like, man, if there's a way that we could buy this cash flowing as is, we could really, add a ton of value here. That was the case, because then the next year we ended up buying another $1.2 million self-storage facility by refinancing the first one. So we didn't have any cash in this deal. We had one investor put in $65,000. I still owned 72%. Josh owned 13%. The investor owned 15% for the $65K plus a little bit of preferred return. No money down for Josh or I, right? So right from the get-go, we actually got paid $10,000 from the seller at closing to buy the deal, because we had to do a lot of things. I said, hey, for closing and putting this whole thing in the deal, you're going to pay us $10,000. He's like, okay. There was no
Wow. So
it was crazy. It was nuts. And then, so then we bid off the second one. So now we're in for, about 2.4, and 9 months after that, we had a little bit of value there, raised the rents. 9 months after that, it was around November or Christmas last year, I got an email. And it's from a broker that I'd never knew before, but it's regular for me to get stuff like that in Southern Wisconsin, across the country now and stuff. And I just kind of let it sit there. He said there's some guys that sold apartments on the west side of Madison. He was pretty brief. Sold some apartments on the west side of Madison. He didn't say how many, and they're looking for some storage units in between Madison and Janesville. And I was just like, whatever. I'm not just some BS. And finally, I'm once again, I got kind of bored of going through my emails that I missed. I replied to him, hey, what exactly are they looking for? We got some stuff in Janesville and Edgerton, right where they're looking. He got back to me and he says, well, these guys sold 315 apartments and they got 1031. They're cash buyers right now, but we put a crazy price on it, and 365 or something, which I know that I wouldn't have bought it at that price.
Between the two?
Yeah.
Both facilities?
Right. So we're all in at 2.4 with a total of $65,000 equity. That wasn't mine, right? And then we sold it. So we made, and it paid distributions every single month. And so we made over $1 million, in 30 months. And I don't know, me and Josh talk about what I'm gonna do, and that to top that, Josh and I always talk about dude, how cool would that have been if it was actually 10 times the size? Because now now you're at 23 million, you put 650K in, sell it for 37 million or whatever. That would have been nuts. But yeah, I'm finding an opportunity like that again is just
wow.
Situation where we bought the first one, we were the only people that guy was talking to. Had been listening for 11, 12, 13 months, whatever. And so we were able to be pretty aggressive with it, and yet make it work for him where he was happy, and then just put a lot of work in.
So that's springboarded you, right? I mean, first you're resistant to this deal. Your buddy brings the deal to the table, or at least suggests it, and you're resistant to it. Just didn't know what you didn't know. Finally open your mind to it. You take that first one down, and then you find another one very similar to it. You take it down, you're into it 2.4. You ended up selling it for 3.6. Did you say?
Yeah, 3.56 or
something like that. The challenge, I think, is now how do you beat a deal like that moving forward?
I don't know. I'm still broke right now though, because then I just like all into the next like deal, and we hired a gal that used to oversee $750 million of real estate for a huge company in Madison, and she's on our team now with the management arm. I'm letting her roll with that and have a transition there. But so I just like it's just gets dumped into the infrastructure to hold more units and more real estate. But yeah, I don't know how we like actual like return wise, like on that $650 or $65,000, the return on the equity, once again, it was infinite for me and Josh. We had zero.
Yeah.
So infinite, right? And for this, the return on equity on the 65,000, it was something like, including the cash distributions, the refinance, and the sales proceeds, was something like 853% or something.
Wow, goodness gracious. Now, talk about a home run on one of your first big deals. Okay, so move us forward. Now what happens? You got all this cash. What do you got to do?
So when the whole thing was going through, we had a really good idea, last December. We were skeptical. We're like, man, if we can get this number, like it'd be great. And we actually started that conversation at 4, but we're like, hey, if we get an offer of around 3.5, I wasn't expecting to get 4. I thought that'd be crazy. But I'm like, hey, how hungry are these guys, right? And I'm like, hey, if we get around 3.6, 3.5, we'll still take that. If it goes underneath that, no. So this whole time we're thinking we're going to get somewhere between that 3.5 and the 4, which we did. And so the whole time we're like looking for deals. And and obviously when I bought those storage units, then we also had those other acquisitions that we have now, 88 unit, 24 unit, 40 unit. So, but when that whole thing was going down, we were like, okay, trying to find where we're going to roll our money to, right? And I had other investors that want to put some money to work. Yeah, that's when we ended up biting off the 96 unit. So we'd found that. I don't know how it slipped through the cracks, but in Janesville, Wisconsin, there hasn't been anything built since 2007. So usually anything that comes out to the market, it gets eaten up pretty quick. Cushman and Wakefield had the 96 unit, and we went to their website. I just stumbled across it. I sent one email, and the guys out of Chicago, it was a Chicago office, they got back to me and they said, hey, yeah, let's go. And so we went to look at it, and I'm like, dude, this is a deal that's just like, it could, I try to look at deals. I want for sure things, right? So I try to find out how bad a deal can do, and we still make it and still cash flow and everything. And when I'm looking at this thing, I'm like, there's no way that this, like, in my opinion, like based on the cash flow, it's worth, $6.5 million. We picked it up for 4.9. Now, if someone pays $6.5 million for that, probably not. But I mean, the way that I value the cash thrown off of it, that's what we have it at. If we actually sold it, it might be 6.1 or 6.2, right? Whatever. But off the cracks, there's a little bit of value add there, but it's our lightest value add that we've had to do cosmetically and stuff like that. It's the least intensive.
And so I'm out here in Utah, but help me understand. So Wisconsin, and are you currently in Chicago?
No, so I'm in Janesville.
Okay.
Brokers were from Chicago, which I think that was part of the issue. They didn't. If I go to sell this property, I already know the broker. It'd be a little boutique brokerage that I'd use here. This property is not going to have a national buyer, So Janesville, Wisconsin is where we operated out of. We have properties kind of all over the area here, a lot of different towns and stuff. But Janesville, Wisconsin, population 65, 70,000, something like that. 20 minutes outside of Madison, just south of Madison. We're about an hour west of Milwaukee, and we're only like 20 minutes from the Illinois border. So to get to downtown Chicago, if the traffic's horrible, like it'll take like 2 hours. If it's pretty good traffic, you can get downtown, hardly downtown, like an hour and a half.
Gotcha.
So,
Gotcha. Okay, cool. So, and did you say that this was off market? You had said it had been on the market for a while, but was it just a stale listing? What was the
96 unit?
Yeah.
It'd been listed for like 6 months, but I know the players around Janesville, and they would have scooped it up because when they heard I had it on a contract, they're like, hey, how'd you hear about this? I love the guys at Cushman Wakefield, but I don't know if they didn't do the best job or if they were just punting more nationally, or that's why I just don't know that if I was. But once again, that owner, he was from Chicago, so he might not have known better either. I don't know. He'd owned it for 6 years, but they got out of it what they wanted to get out of it too. They
Sure.
They own a ton of units, and they're a big company. They have national. They actually do have stuff nationally. but I think they just hit their number, and I look at it, I'm like, okay, well, we'll roll with this. So, but we paid the first distribution to the investors, 16 days into that deal. We just paid our second one already. So it's fast. It was fast.
When did you close on it?
May 31st.
Okay. Great.
First distribution was like June 14th or something like that.
Okay. And so it's a 96 unit in Wisconsin. You paid 4.9 for it.
Yeah, it's all one bedrooms. We got it for like what is that? How much per unit? You might have the calculator in front of you. I can't remember.
I don't, but yeah,
it's low. Yeah.
So what was the business plan with it? What was the opportunity that you saw with it?
Just to buy a stabilized asset for, put it to, relatively compared to what other stuff was trading for in the area here for under market value, in my opinion. I really think that we could turn around and sell that today for, that 5.8, 6.1 ish number. And it's paying a good distribution. We bought it, so it's full. It was full. We've had a little bit of turnover. The average rents there were $688. We've already got a couple of new tenants for $775. Some lease renewals coming through for $715 to $720. So you look at some of that stuff, and even though it's a really, really good deal, the rents still have room to go up without doing too much to the property.
And you haven't put any improvements into the property, any CapEx?
Not yet. We will be. So it's that loan's with JLL, and obviously when you get to be through it's a Fannie loan. When you get to start doing that, there's more requirements as far as taking care of the property, which I'm fine with. I actually like that whole process of going through with them. I know some people complain about it, hate it. I'm like, I like getting their analysis and going, because they're invested in the property too. Essentially, it's a non-recourse loan. That they're essentially investing in the property. They really care about it, and they've been great to work with. Brian Walsh, there, downtown Chicago, JLL, they were great to work with. They require that we fix part of the driveway up, so we'll tear out part of the driveway and redo that, which I was on board with because trash. And then there was some paint, it's a brick building, but where the windows are, there's wood molding that they wanted us to scrape and repaint, and I'm on board with that too. But nothing as far as cosmetically, it'll just be kind of as we go through. There'll be a little bit of plank flooring we'll install and some new carpet here and there, some new appliances here and there. But nothing like some other projects that we've been involved in. So
that's great. I want to talk to you about one thing that intrigued me about you, and one of the reasons why I reached out to you and wanted to have you on is because you've been pretty vocal about the importance of partnerships in your business and wanting to partner with people in the future. Do you mind spending a few minutes on that?
Yeah, I've been doing more and more podcasts lately, and you're the only one to really bring this up. An example is I actually met a guy down there at the 96 unit to redo our asphalt, and he's an quote unquote investor. And he's just telling me about how he's studying all this law and he's studying all this accounting, which great, have a concept of it, right? But he's like, yeah, I don't even need attorneys. I don't even need accountants. I'm like, dude, what are you thinking? You think that you're going to go do this all by yourself? You think you're going to be the leasing agent, the maintenance guy, now just getting started, and that's how I had to start, right? I had to do it with the 4 unit, but I had in my mind we're going to scale this thing. I don't need to hang on, do all this forever, which is why I invest so much into people, and people like our new chief operating officer, who it's a big investment, but I believe in it. And I'm like, how miserable would that be? I think about that. I'm like, how miserable would it be to want to grow to even 36 units or 72 units and just want to do everything? You want to cut the grass. You want to remove the snow. You want to be the leasing agent. You want to do the marketing. You want to, I can't even fathom that, because I know, number one, you're going to be capped. The moment that you get capped, you're going to be bored. You're going to get stressed out. You're going to be, because if you're not growing, if you're not expanding, right, that's in my opinion, that's where the fun is. You step out of your comfort zone. Now you're out of the comfort zone. And as that comfort zone catches you, what's going on? You're making progress. You're growing, right? Now you're back in your comfort zone. Step back out again. That's the most fun part, is when your comfort zone catches up to you. And when someone tells me that they want to try to do everything to save some money, or because they don't believe in partners, or they got screwed over by one person, or I'm not saying don't be selective maybe in who you work with, but just to want to go try to do everything on your own because you think it's the best way to go is just, I don't know. I think it's egotistical or, whatever. It's definitely not the best way to do things.
Can you give us maybe an example of where having a partner or being in a partnership has really had an impact on your business?
Yeah. And so, I mean, we talk, and I think when we chatted on the phone, I talked about partnerships in many ways, whether it's vendors and, and then also professionals, but then also like investors and business partners. I mean, I think about it like a partnership can be me and my attorney. Like the last deal we did, like paid my attorney $55,000 to do a lot of the stuff that, yeah, I could probably do some of the due diligence, but it's like, I have so much on my plate. Like I'm focused on growing. I'm gladly going to pay him. Cost of attorney is just cost of doing business, right? You have it factored in. Like, you buy a $5 million deal, you're going to have 0.5 to 1.5% of that's going to be closing costs, with including attorney, the bank fees, whatever. And so I just calculate all that stuff in as a part of doing the deal, right? It worked out great because everything gets done correctly. As far as like looking through the environmental, why should I be looking through an environmental? Or why should I be looking through a survey? I don't know what the hell I'm looking for, right? Like, why should I be doing all this stuff with the title and like with the title company? I don't need, like, I have the concept of how it all works. I don't need to know all the details. I got an attorney that I'm going to pay to make sure it's done right. Right. So that's one form, right? Partnership. And then you got, vendors, you got, investors. I mean, there's deals that I've pulled off that I wouldn't have been able to pull off alone because we wouldn't have the equity to do it. Right. So as far as like the investors and being able to work it out with them, but I just look at without the partnerships that I've had, I don't know that I have more than the initial 8 units right now. I'd probably would still be stuck there.
That's great. Thanks for that. Appreciate it. All right, man, we need to wind down here. I've got 3 questions for you as we wind down that I want your just knee-jerk gut reaction to. You ready?
Mm-hmm.
What is the biggest mistake you've made on your apartment investing journey so far?
The 88 unit that I bought, I'm like, yeah, we'll worry about the roof and the boilers later. And that, like, thank God is a cash flow producing property. So it didn't matter. We were ultimately able to figure it out because we got all new roofs and we have all new boilers now, at like 500, $500,000 later. But when I was first starting, like now it's like, we got a plan for all the CapExes. We're aware of like where the roof's at. We're aware of the boiler. We know what they're going to cost us and how much life they have. And we know how it's going to affect the returns, et cetera, et cetera. So that's a big one.
What's the biggest win you've had on your apartment investing journey so far? I could probably guess that one.
Obviously the storage unit deal, right? I mean, if we can throw a storage unit deal out there, but I mean, even like, all the deals have been great. Like we bought the 8 unit, the 4 unit and the 4 unit, those initial 8 units, we bought them total of what, 390,000. We had refinanced for 100K. And then when we sold, we ended up selling them for 610. Like that was good, right? The 47 unit we have down on the river, we've taken that from, by getting partners involved. I have 25% equity on that thing off the table. Before we even took it to the partners, I put cash in for another 25% based on performance. I can own up to 75% of that property. The investors will still be happy if that happens because they'll have a really good return. We've already taken the rents there since September of 2018 to now. We've taken the rents from 27 to 28,000 ish per month, and this month's gonna be about 36,500. So you're increasing. So that's a big win, right? I mean, like the 88 unit. I mean, the value on that, we buy it for $6 million, and now we're sitting here is probably worth between 7.5 and 7.8, right? So it's just the cash flow producing real estate is just. But the storage units, I don't know how you can top. I
don't think you can top that. And you might have a hard time topping that ever. Yeah. But we'll see. We'll see. If you do top that, we're having you back on. That's for sure.
But I also view it as if we get a 18% annualized return on a $50 million deal, how can you not say that that's better just because of the straight up
the size?
Size. Yeah.
Yeah. So. Absolutely. Cool. And then lastly, what's your best advice for someone who's just starting their apartment investing journey?
Number one, learn. You got to spend time. You have to spend resources, time, money, getting around and getting material that you can then implement and use, right? So that's the biggest thing is never just learn just to learn, but learn with the mindset I'm going to implement. So number one, learn. Spend money, spend time, get around people, get their products, go to the seminars, go to webinars. That's what I did. But I did it with the mindset and read 120 books. I did it with the mindset, I'm going to go implement this. Number two is find a way to make money. For me, it was direct sales, right? For number three is find a way to save that surplus as your money goes up, save the difference so that you can invest it later. Don't have your, living expenses go up as your income goes up. So while you're doing those 2 things, keep looking at deals, keep learning. Then number four is get out and look at deals. whether that's business or real estate for people, right? On this show, I'm sure it's a lot of real estate, but get out and look at deals. And then number 5 is don't be scared to pull the trigger, right? So now while you're at number 5, once again, you should be doing all of them, right? But that's my advice, and kind of what I look at what I did, and that's what I did right there. So
yeah, appreciate it. Great advice. Well, look, Justin, I appreciate you coming on, sharing your thoughts, sharing your experience, sharing your expertise. Before we sign off, how can listeners get in touch with you, reach out to you, learn more about what you got going on?
Yep. So you spell my name. Justin is the first name, Justin, last name, Spaulding. So it's at Justin Spaulding for Instagram. You can find me on YouTube by just clicking in Justin Spaulding. Facebook, I'm on there, Justin Spaulding. That's kind of the places. LinkedIn, if I didn't say that one. Once again, I kind of try to be everywhere a little bit. My biggest one that probably gets the most attention right now is probably Instagram.
I believe that you have some training that you've put together for people that are interested in getting into this space, learning more about apartment investing and multifamily investing. Can you tell us a little bit about that?
Yeah, so I was really urged by some close friends and people who had been following me on Instagram. Like, number one is, like, if you took the time, it takes a lot of time to go through all my Instagram posts and read them, and my YouTube. Like, you could probably find everything that's in my course. But once again, it's just the time thing of going through, and versus the courses package. I mean, it shows you everything from point A to point Z, like basically everything that I've done, from buying the 4-unit to making money to do it, to, all the tools that I use. Everything is a part of this course. Go to www.justinspaulding, JustinSpaulding.com/DM. But yeah, the course there is $997. You can get it for life. There's 8 hours of content there in video form, plus all the tools you get access to it for life. All those options are there if you go check it out.
Great. And we'll have that in the show notes as well. Well, again, thanks for coming on, and hope to connect with you again soon. Hey guys, thank you so much for joining me today. If you liked this episode, please take a quick second and hit that subscribe button. Even better, leave a quick review. This helps our show get found by others and helps us attract great guests as well. So thank you so much for joining me, and we'll see you next week for another episode.